March 27th, year 2024. In this video, I will be discussing Corporation Tax Return T2. This video will include regular corporation, shareholder, natural person, shareholder, artificial entities, such as corporation, dividend and interest income, capital gain, small business deduction, adjusted aggregated investment income, RDOTH, refundable tax on hand. This is my contact information. Now let's move to the Excel sheet so I can show you how is it different when we only have individual as a shareholder or shareholders in the corporation. Again, today is March 27th, year 2024. This is Mijanur Rahman. The copyright with respect to this video, content, illustration, presentation, every aspect of it belongs to me. There is the disclaimer on the top, and the fair usage is allowed. So you could learn. So this scenario is exactly the same scenario what we had before. I only made 2 to 3 changes within this presentation. I will be focusing on few things rather than I'll only be focusing on active business income, a small business deduction, adjusted aggregated income, and the capital gain, and also the RDOTH. So how is it different? Everything is the same up to here. So the Mr. Gabriel is the shareholder in this corporation. He's the majority shareholder, Mr. Gabriel Angel, and the minority shareholder is World Investment Inc. It's just the corporation name. Everything else is the same. The dividend amount is 30,000 for Gabriel, and World Investment Inc. would receive eligible dividend income from the Fine Pasta Restaurant Limited for $9,000. The dividend payment rate is 30%, if I'm not mistaken. And again, everything is the same. I will not discuss this. You know how this works. What I want to make sure that if you see a cell that is highlighted, it has a significant meaning to it. And another thing that I wanted to mention in this presentation is that if you have QuickBooks or any other accounting software, you could export this data, gather the data. Some individuals, they Some individuals, they do not use QuickBooks, especially if they are a small business and their earnings is below, their net profit, or the taxable income is below $1 million or $2 million. Then, well, $2 million, sometimes it could be, um, let's put it this way. If they're able to deduct their small business deduction, they are considered to be a small business. If they're not, it is most likely they are not a small business. So the reason I want to point this out in this video is that the topics that I want to point this out in this video are the how we calculate the taxes and the active business income, the most important ingredients in tax calculations for the corporation. So as you know, we have this corporation. It has $1.2 million revenue. It has net income for tax purposes $574,518, and then we change the capital, the CCA amount to $27,473. We assumed that in this case, we assumed that the equipment and the built-in unit was purchased at the beginning of the incorporation, not the incorporation, the beginning of the startup of the corporation when the venture started to run, which is much more reasonable and practical. After the CCA calculation, the net income for the tax purpose is $556,745. I apologize, $556,745. And other deductions, again, the dividend income, in this case, the corporation earned is $30,000. I did not change anything to that. As a result of the changes in taxable income, we have now tax payable in part 1 is $51,970. The way we calculated our general tax rate, simply multiplying this taxable income and this general tax rate with, so if we multiply $526,745 with 38%, that would give us $200,163. Then we have an abatement of 10% of the taxable income, which is $52,675. And we have the small business deduction of still $95,000. In our previous video, I have calculated the active business income. Well, let's put it this way. In my previous video, the active business income was calculated incorrectly, but it didn't make any changes to the final calculation or tax calculation because the active business income was higher than the small business deduction limit, right? So in this video, we'll get to that in few minutes. Again, the GR rate, in this case, we have the taxable income less the small business deduction less the aggregated investment income. Keep in mind, the aggregated investment income is something that is from current year. Okay, the adjusted aggregated investment income, which reflects the small business deduction for the next year. Okay, so just to make sure that you are aware of that. All right. So this $14,245, that is the income eligible for general rate reduction. And our general rate reduction amount, in this case, the tax amount, the deduction amount is $1,852. Right there, you can see. So we calculated our, again, the total deductions would be $149,526. Our Part 1 tax payable would be $51,970. This is different from the previous illustration. The eligible dividend from the non-connected corporation was the same, which you received. Remember, we received $30,000 in eligible dividend, and that triggered $11,500 in tax payable. I'm going to adjust this over here, okay? For some reason, if we round off, there is a bit of rounding off issue here. So we'll keep it this, okay? It's supposed to be $79,096, the total tax payable. Because of this, the rounding off issue, anyway, so we have this. So as you can see, highlighted in gray is the dividend that we received, the corporation received. Highlighted over here in light green, you can see shaded as well here, is the dividend that the corporation paid. Now, these two class falls in the same bucket, in the eligible ERDOTH, eligible refundable tax on hand. That's the bucket. This is the amount that fine restaurant would pay, and this is the amount that the refund that the fine restaurant, the fine pasta restaurant would receive from CRA. So the total tax payable would be, I'm going to adjust this over here. So that would be $79,095. This is merely a rounding off issue. The exact amount would be $11,500 in this cell over here. Again, now we'll get into this discussion, the snapshot and the major decisions that would be affecting the SBD. So as discussed earlier, this is the dividend, the refundable dividend on hand. So the 11,500 came from the dividend that we received, and 3,450 came from the dividend that we paid. Okay, and so the total tax payable is $79,995. Then we discuss the taxable, the amount that is affecting the SBD. So we know 90% of our asset must be used to generate cash. I apologize. 90% of the total asset of the corporation must be used to generate active business income. We use 91%, 50,000, 40,000 plus 10,000 gives us 50,000 divided by $551,892 gives us 9%. 1 minus 9% is 91%. This is the amount, the vehicle that the shareholder, Mr. Angel, used. This amount would go to his T4. We discussed that I discussed that in the previous video. The way we calculate the active business income is the net income for tax purpose less the interest income, less the taxable capital gain, less the dividend income. That is $511,745. You need this to calculate your SBD or the small business deduction. Then we have the aggregated investment income, which is the taxable capital gain plus the interest income less the net capital loss. Actually, this should be allowable capital loss. So this should be allowable capital loss. And this deals with the current year. So current year situation. Okay. Now the adjusted aggregated investment income only includes the taxable, let's put this over here so you can understand it better. Perhaps I could put it over here. No, let's leave it here. Let's leave this over here. Okay. So this is basically the taxable capital gain. I should have placed it over here, but I chose to place it over here. Okay. So that's what it is. Okay. So the capital loss, the allowable capital loss, less the taxable capital gain and the portfolio of the dividend. So this is total is $37,500. We are below the $50,000 limit. So meaning is that one more time, the SBD would get affected by when the adjusted aggregated investment income is over 50,000. So you can see it over here. It would be reduced by $5 for every additional $1 adjusted aggregated investment income. Then we know the 90% of the asset must be used in the business. Then the second test is that we must meet the $50,000 adjusted aggregated investment income, and the taxable capital employed in the business must be $10 million to get the full deduction. Any exception to that, your SBD limit would be reduced. Okay, you could read it on the screen. This is the bucket for the non-eligible refundable tax on hand. NERDOTH. You could call NERDO or ERDO. NERDO or ERDO. So in NERDO, we have the way we calculate is that we have opening balance 0, and then we have the dividend refund from the preceding year is 0, and then we add this is the addition, okay? This is the addition, which is remember we had the aggregated investment income from the current year, okay? We had this. So we calculated that over here in line C175. So let's go up C175. Right here. We just simply multiply this with the 30.67%. Now, this is the lesser of these two. It's always these changes because of this is actually what do you call that? This discourages corporations to invest. Well, maybe not. The way the mechanism works is that the company should be generating revenue from its main activities, not from the investing. Okay, then it changes its revenue generation. It changes the nature of the business. Okay, so that defeats the purpose. So the 30.67% multiplied by the 12,500 would gives us $3,833. And then we have the 30, we don't need to calculate this, okay? We know this right away. This is basically the taxable income multiplied by this, okay? We don't need to discuss this. But if you want to take a look at that, I don't mind. It's F65, line number. It is right here. You can see that $526,745 multiplied by this amount. Okay, it's right over here. So then we sum this up over here. We just sum this up, this over here, and we compare this. You see the shaded area over here on the screen? You can see we take the balance of this calculation over here, the balance from this, less whichever is the least of, okay? So then we say, okay, well, did we receive did we pay any dividend? So if we paid any dividend from the non-eligible portion, so let's say in our case we have $26,000. That is you have 500. How much is it? Let's get this over here, okay? So let's assume that company has $600,000 in PI, taxable income, and SBD of that is $500,000. Okay, and we have so any dividend, and then we have the above. Well, this $100,000 is the above the limit. Above SBD. Okay, so these are total income. Let's assume that this is the after-tax income. Okay, just for curiosity, but usually, so this, if we pay any dividend from this income subject to SBD, then this would be ineligible. Any dividend we paid from here, right? Any dividend we paid from here, this $100,000. So let's say if we pay 9,000 from here, this would be our eligible dividend. Eligible, isn't it? ELEGIBLE, eligible. Okay, and then no, mistake. ELIGIBLE, and then any dividend we paid here, if we paid 30,000 from here, that would be non-eligible. So this would be non-eligible, this would be eligible. Okay, so now you know. So now, since we didn't pay any dividend from the these 30,000 we paid to individual, we didn't pay to a corporation. We could only claim it if it's paid to a corporation, not to individual, a natural person. That was the discussion topic. Any dividend paid to a natural person would not trigger a dividend refund to the corporation, in this case Fine Pasta Restaurant Limited. Since we paid $9,000 from the, if we paid $9,000 from the non-eligible, which we didn't in this case, then it would trigger some dividend refund. But we didn't pay anything. Since we didn't pay anything, then this bucket, we don't have any balance. We paid $9,000 from here in here. As you can see, since we paid $9,000 in eligible dividend, it created a dividend refund. This, again, same way, this bucket over here, non-eligible, I'm going to highlight that in red. Non-eligible, and green is over here, is our eligible bucket. Red, non-eligible, green, eligible. 9,000 dividend paid from the income earned above the SBD is considered to be eligible. So what if we didn't have the SBD limit of 500,000? If it was 400,000, then it would change. If you shared the SBD with another corporation, then this would change, or for any other purpose. Okay. So again, the SBD can also be affected where if you have an associated corporation, right? If you're a spouse or your children or the shareholder of the same corporation is involved in another corporation where you own certain numbers of share. But let's not. I won't get into that discussion here today. But know this, that the small business deduction is very important for small businesses, but if it is large business, then it really doesn't matter. It's very insignificant for a company that earns billions of dollars, millions of dollars. Okay, for small businesses. And then again, this is the dividend refund. So this is the amount that we would get the list of this too. I don't have to show this separately. Okay. Again, we received dividend over here in the green box. We received 30,000 that triggered 11,500 or 11,499. It's a rounding off issue. 11,500, and right over here in this cell, okay? This to sell. You can see it. And this, we paid $9,000. That triggered 34,000. I apologize. $3,450 in in, uh, in dividend refund. This is the amount that we owe to the CRA. So we owe, and this is CRA owes fine pasta. Fine pasta owes to CRA, and this is the fine pasta owes it, and this is the CRA owes to fine pasta. Okay, and then again, the lower of these two is the dividend refund. But we actually, sometimes it gets tedious to calculate this, but it's very simple. In a simple this way is that if you it could get complex when you have many investments, when they're connected corporation, non-connected corporation, foreign corporation, when there are large corporation and small business corporation, when there are issues with the dividend declared above when there's part 3 tax kicks in, when the corporation to attract investors issues dividend, right? And then that would trigger issue with that may. Okay. Don't quote me on this 100%. I would have to calculate that. And again, we discussed this in the previous video, the CDA amount. Okay. Did I miss anything? So again, keep in mind the small business deduction is highly sensitive. The reason I'm telling you this because if you're a professional, if you're a small business, your income is low, then you need to be careful how you invest. If you lose out $95,000, it's a lot of money for a small, simple, silly mistakes. Because if you're not cautioned, you could lose that. Let's say, for example, you thought that the company has $300,000 sitting in the corporation. You thought you're going to use that money in the business operation. Then you decided to invest it. And the moment you invested, and if it triggered any of the scenario that you didn't use 90% of the total asset of the corporation to earn business revenue, B, your adjusted aggregated investment income is over $50,000. C, the taxable capital employed is more than 10 million. And D, whether you have any association or connected corporation or associated person, it could be shareholder, usually triggers from the shareholders. If husband and wife, they have two different corporations and they each own shares of this corporation, or the husband owns share, so that would trigger husband owned shares in another corporation. So let's say, for example, you and your spouse, in this case, you and your spouse own a corporation, and then your spouse own another corporation where she's solely shareholder. and that would be, associated corporation. Both corporations now share $500,000 small business deduction. Okay, so these are the four criteria. This gets more complicated later on, but no need to get complex. But I hope that this is actually better for large business. It's the large businesses, they actually get penalized in part 3 tax, where they attract customers, or not customers, investors, by offering dividend above their capacity, and they pay penalty on it. Okay, but anyway, let's not get into that discussion. It's not a penalty, but it's more of it increase their taxes by, don't quote me, I think it's 20% or more, I'm not sure, but anyway. Let's go to profile. Again, nothing changed from the previous, exactly the same thing. The only thing changed over here is nothing changed over here either. The class 8 should, the class 8, not the class 8, I mean the schedule 8, I changed the asset class to 53. We assume that we bought it at the beginning of 2023, and that changes the UCI amount and the capital cost allowances. You can see that 27,000. As a result of that, our few thing changes over here. The net income for tax purpose, which is right over here. You can see it right there. And also changed, what other things we changed here? In Schedule 3, we paid, remember, we paid dividend, we received dividend over here from Apple. You can see it over here where my cursor is. Apple. We paid 30,000, or we received 30,000, and that's the dividend we received. And the fine pasta paid to Wald Investment Inc. $9,000 in eligible dividend. That is the bucket for eligible refundable tax on hand. Okay. So basically, this is $33,450, the eligible dividend that the corporation, the fine pasta, would receive, and they would pay $11,500. Okay. But if you can see that on the you can see it over here that this file, we can file this e-file, and then our federal taxable amount is on the bottom of the screen. You can see is $526,745, and the federal balance is that the $79,095. It's supposed to be combined balance. I don't know why it's showing federal balance. It's really combined balance. I didn't show you in this the Ontario tax. You know that how to calculate this Ontario tax, which is over here. Okay, we simply multiply by the amount, the whole amount, by the 11.5%, and then we take the 500,000 on the 8.30%. You could do it other way around as well, and then this is the difference of these two. Okay, that's $19,076. That's the Ontario government gets. Okay, and that's it. Nothing on the Schedule 6. You can see that over here. It just simply calculates the taxable capital gain after the capital loss, the total taxable capital gain after the capital loss. And then we have Schedule 7, where we showed the capital loss and capital. This is the Schedule 7. Again, I apologize. The aggregated investment income. Okay, that is just, we showed this to you earlier over here. I showed it to you over here. This amount, how this is calculated. That's Schedule 7. And then this is right over here. Okay. Then in the balance sheet, few things changes over here. We reduced our cash dividends to 39,000, and our prepaid went up by 16,000. Now it's 28,000, and that's it. Nothing else. Again, this is the Schedule 500 that shows the Ontario taxes. And then this is our T2. If you notice something on the info sheet, they changed something which they are telling us to do. Follow up with the Corporation Information Act annual return. With Canada, this is a recent change. When that change came to effect. Let's take a look at that. As of May 2021, that is in effect. I was out of the tax preparation business for a while, and so this year I decided to get back. And I hope, and the reason I'm actually the way I develop my business is that I help my clients learn and grow together. It's easy to make decision together. I don't make decision for my client. I provide them with all the scenarios and then let them know these are what are the pros and cons. If each decision would have pros and cons, benefits and disadvantage, and how that affect them. And so they can understand clearly that the decision they're about to make it's better for them, because it is better to make decisions someone who is educated, who has knowledge, who can understand things. Okay, and this has been always like that. When I was in the financial planning industry, I educated my clients so that we can work together, and that's why, by doing that, you could retain your client. Your client retention ratio goes higher. At the same time, you don't want to uh, uh, overjam your clients with unnecessary information, right? If they want to review this video, sure, they could go and learn, but obviously they won't be able to if they're not an accountant, or if they don't have an accounting background. They won't be able to prepare their own T2 return, maybe T1 possibly, but not T2. Okay, and that's about it. Am I missing anything? I guess not. Okay, in next video, I'll talk about the large corporation. Okay, there you'd see the detail about the adjusted aggregated investment income, the things that doesn't fall into part 1 tax, and where the company, to attract investors, they declare dividend above their capacity, which is part 3 tax. Okay, we'll talk about that in detail. Hopefully I was able to help. If you have any questions, concern, you can contact me on my contact information. So this is my contact information. You could please feel free to contact me. There is a disclaimer. This is only a sample demonstration for your specific situation. Please contact me or other professionals for legal, accounting, or investment advice. Okay, you need someone who is educated, who can make an informed decision for you. Not all the time the professional have that information, but as a professional, I would be able to get this information for you. If you call me up for a legal matter, I should be able to gather some of the information for you. So let's say you call me up for a tribunal matter or a court matter, I should be able to, because I'm a paralegal, and as a paralegal, you're allowed to give, you're allowed to help people, individual who needs help with the legal matter. Okay, the paralegals are considered to be an agent for the client. Okay, it will change over time. As you can see, the I completed my post-graduation paralegal and advanced accounting and advanced uh, certification in financial planning. So remember the paralegal and the lawyer will at some point. I'm hoping that they would come to same understanding. Right now, the paralegals have some disadvantage in representing clients, but if I think this will change over time. But paralegals are no less than a lawyer in representing a client. But again, this would be my opinion. Don't take this, but where you need a lawyer, contact a lawyer. Where you need a paralegal, contact a paralegal. Okay? I hope this helped.